Well, welcome everybody to the April 10th, 2025 ESS Finance Subcommittee meeting. I'll first ask for any comments or regarding the March 6th summary minutes of our last meeting. Everyone have a chance to review it. I think I found one correction on page 2. We have it should be mileage and it looks like it's millage. The second to the last paragraph. That's the only thing that I found. I was not able to attend that meeting, so I'm relying on everyone else. Did anybody have any other modifications or corrections to the minutes? If not, I would take a motion for approval.
This is Geraldine. I'll make that motion.
Thanks, Geraldine. Do I have a second?
This is Sherry. I'll second.
Thanks, Sherry. It's been moved and seconded. All in favor, say aye.
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 Aye. All in favor or opposed, same sign. Motion carries. Okay, we'll start with our financial reports. Lisa,
I'm delighted to
receivable
report
update.
there is no outstanding accounts receivables at the end of March. So Samantha is a killer at following on those and making sure we get paid.
That's great.
Yes,
That
it's
is.
wonderful.
That's great. Thanks, Samantha, and thanks, Lisa. Okay, we'll move on to the April summary of March ESS payments.
Accounts payable. I just have a few things highlighted here that you don't see every month. Mancy did need a new charger for the $31.03. And then also I have the Tyler redaction charges highlighted. Usually you're just seeing those forward file redaction charges, but in the month of March, we did start the back file. So this includes back file and forward file redaction charges. For the credit card expenses, the $8.55 was to send a package to Tyler County. And then the $200 was to renew the membership for Iowa Mortgage Association. All other charges are regular charges that you see every month. I'd be happy to answer any questions on the payment reports.
Any questions for Samantha? If not, I would take a motion for approval for the payments. Amy, motion. Do I have a second?
This is Melissa. I can second.
Thanks, Mel. It's been moved and seconded. All in favor, say aye.
Aye. Aye.
Aye.
Aye. Opposed, same sign. Motion carries. Now we'll move on to the April Fund 255 reimbursement invoice.
Okay. The April Fund 255 reimbursement invoice came in at $49,961.89. This is to help us with the payroll expenses for March. As you can see, our payroll is higher than what we are receiving back from the state treasurer's office. I'd ask for your acceptance and approval to submit this to the state treasurer.
This is Sherry. I'll move to approve.
Thanks, Sherry. Do I have a second?
This is Geraldine. I'll second.
Thanks, Geraldine. Moved and seconded. All in favor, say aye.
Aye. Aye.
Aye.
Aye. Opposed, same sign. Motion carries. Okay, we'll move on to the February 2025 financial reports.
Okay. The Bankers Trust checking account started with a beginning balance of $0 and ended with a balance of $0. We were successfully able to reconcile that account. The money market sweep account had a beginning balance of $1,309,554.43 with an ending balance of $1,285,021.88. We did see the interest percent go up just a little bit. The last couple of months, it's been 1.2% and 1.3%. So it is showing a little bit of an improvement with 1.36%. Interest earned in February was $1,326.04. In the money market sweep account reconciliation. And the drawdown account. Profit and loss for February. Does show the interest income at the top for $1,326.04. We also had several chargebacks or returns in February, so that's what this bad payment fee is. We are charging $35 on every chargeback or return, as that's what Professional Solutions is charging us. So we're just pushing that expense back on to the customer. Budgeted income of $134,748.20, with revolving income at $2,399,951.75, with a total income of $2,534,699.95. For expenses in February, you will see this negative $144.18. This is a combination of the normal QuickBooks monthly charge plus the tax refund from the annual expense. ESS meetings at $663.10. This was for the in-house ESS coordinating committee meeting. This included lunches and then also mileage reimbursements for the attendees. Bank account fees. This charge was actually a little bit higher in February. However, we were able to get the taxes back for all of 2023 and 2024, and then they did get the account switched to non-taxable. Conferences and meetings. This was due to the canceled Priya flight. So this is just the reimbursement for that. Phil ended up not attending the Priya conference that month. And then the JetBrains annual expense of $2,001. With total budgeted expenses of $109,096.89. And then the AccuSoft Prism bill annual expense did come in February for $25,050. And this is in the reserve. Depreciation did go down a little bit for 2025 at $22,684.73. Revolving expenses came in at $2,400,709.77, with total expenses at $2,557,541.39, contributing to a negative net income of $22,841.44. For the budgeted profit and loss for February, the budgeted income was $134,748.20, with budgeted expenses at $109,096.89 for a total net income of $25,651.31. For the balance sheet, the BT account is $464,309.51. This is due because we are accrual-based accounting, so really this amount is higher than the actual checking account balance. And the money market sweep account is $1,285,021.88. With total assets and liabilities at $2,567,243.56. I did print the journal entries for February, and this is mostly just to show you the us transferring money in and out of the checking account and in and out of the sweep money market sweep account. So this is a daily entry that we do every single day. And then also the depreciation expense at the bottom. The credit card beginning balance was $6,963.28 with the ending balance of $1,831.06. We were successfully able to reconcile that account as well. The Fund 255 account had a beginning balance of $161,074.16 with an ending balance of $166,262.86. The total receipts for February of $49,961.89, which is the same as the Fund 255 reimbursement invoice that you approved. We were able to successfully to reconcile that account. The profit and loss for February, net income of $5,188.70. And the balance sheet with total assets and liabilities of $166,262.86. Be happy to answer any questions for the February financial reports.
Any questions for Samantha? I had a question about depreciation. How many years for equipment or non-equipment? I'm trying to think what just fell off in what just the depreciation that just stopped. Is it like 7 years, 5 years?
3 years.
3?
Yep.
3, okay.
Yep. And we did have one that was fully depreciated as of the end of 2024.
I didn't mean to say fell off. I'm not using the right terminology, but
That's
just
okay.
wondered. And I had another question about QuickBooks. So this is just, it sounds like that they've really been charging a lot, like for their annual subscriptions, their business. Have you guys noticed that, like moving into, I don't know, as you plan? I know it's a monthly fee we pay, right?
Yes, it's $127 monthly.
Has that increased quite I mean, do we get notices that it's going to go up huge, or do you have to buy the program every year to keep it up to date?
Yes,
Does that make sense? I'm sorry, I'm
yeah,
not
it's
asking the
okay.
right question.
I'd be happy to take that one on.
Okay.
Okay,
So
thanks, Phil.
we have a QuickBooks Enterprise license with Intuit, and I don't remember the exact amount, but it's roughly 37.50 a year, and that is a big annual expense,
Mhm.
except when you compare it to everything else.
Yeah,
And so in fact we kind of every time we have our audit, we did have this discussion again this year about, do we want to switch? Is there something better? And switching accounting systems is not a cheap endeavor. And when we were at the very beginning and transaction volume was small, it might have been possible to do something easier and cheaper, but with the transaction volume that we have, and which is roughly around $32 million a year at the moment, and we keep track of every single transaction. We just have to have something more than a typical small business software. And QuickBooks has been a reliable and relatively easy to use software package. The only real issue we run into it is the size of the file. The size of the file gets big, And in fact, last year we had to create a new file and basically kind of port over the balances into a new file and then start over again. And then as we complete each audit, we need to compress the file in order to save space. But comparatively speaking, at least in our opinion, there are other alternative software packages out there. Each of them have their pros and cons, and they that none of them are cheap. So this is sort of in the category of cost of doing business. And then separately from that, we pay a monthly fee. It also it goes to Intuit, but it actually is for a third-party hosting environment. So we do not run our QuickBooks software on an internal equipment. In fact, we don't even have a server anymore. We're completely in the cloud. But but we do buy a service through Intuit for a hosted environment where our accounting software resides and where most of our files relating to our financial transactions reside. And that's been roughly in the range of $140 a month. It has gone up this year, but not precipitously. It's been more incremental, more oriented toward inflation. And again, the alternative would be to either find a different hosting environment or to purchase our own equipment to host that, which doesn't seem to make sense at this point in time. The hosting environment is provided by a company called WriteWorks. They're a business partner with Intuit. And so basically our software sits on that environment and all of our files. So I feel we it is not a trivial expense, but comparatively speaking, it is affordable. So at this moment in time, we would not recommend making any changes.
Thank you for the explanation, Phil. It seems like QuickBooks is universal. I mean, our sheriff's office uses it, so I just know that, personally, they just jack that price up a lot for a small business as well. So that's, something to think about, but it's kind of trivial compared to, like you said, it's not a huge expense, but I just wondered if it was gonna go
You
up a
bet.
lot. So thanks for the explanation, both of you. Anybody else have any questions as far as all of the financials Samantha went over? If not, I would take a motion for approval for the February 2025 financial reports. I'll go ahead and make the motion. This is Stacy. Do I have a second? Looks like Melissa in the chat pod seconded. All in favor, say aye.
Aye.
Aye. Opposed, same sign. Motion carries. Okay, the audit update, is that Samantha or Phil or both of you?
I have comments, but let
Okay.
me ask Samantha that she did most of the work on the audit this year, so I want her to give the description to.
Okay.
Rachel from Denman was here the majority of the week. It went pretty good, pretty smoothly. She didn't really need a whole lot. And I feel like it went pretty good.
Well, I'll add to that then, and I think the main thing I want to add is that the Denman Group does audits for a number of different government agencies and other 28E organizations. And I haven't been through an audit in a county before, so I can't really compare it. But from my perspective, it is a very good process from the standpoint that, we have a pre-audit meeting with our auditor every year. We talk about changes in the market, the business, anything new that's happening uh, to prepare for the audit. The auditor, they have a system where they asked us to provide all kinds of documentation. The documentation includes a review of the contracts that we have in place. They go back and look at the minutes of the meetings to make sure that the contracts have been approved and that the budgets and other things actually go through the ordinary decision-making process that you would expect a government organization to do. And then in addition to that, we produce quite a bit of documentation from our human resource system to, to show compensation to staff, to show benefits, to show PTO. Part of that is that we have to separate out expenses that we prepay for that aren't really expended until a later point in time. And then they randomly select transactions from different months. And a lot of what Samantha has to do is they say, okay, prove up these transactions. And they follow it all the way through the accounting system, right back to the bank statement. And then as a part of that, there is also the discussion with the members of the governing board to make sure that they are checking to see if there is any evidence of fraud. And as Samantha said, we go through that process. We do our homework in advance of the audit. Then the audit is here for almost a full week. And basically all of us are tasked at one point or another of saying, okay, let's go look this up, prove this to us. And from my perspective, it's a pretty thorough process. So we're finished with the on-site work, and where we are at right now is that them is compiling all the information, and sometime in the next month or so, they'll be preparing an audit report. And typically, we ask them to come to the August finance meeting and the August ESS coordinating committee to make their formal audit report, and then we file it with the state auditor's office. So I would say it is a fairly thorough and complete. In your materials, Samantha, I don't know if you can display it or not. One of the things that we have to do as a part of the generally accepted accounting principles is to produce a software asset value determination. And I was looking at my records. I think we started this back in 2018. So we've been doing it for a number of years now. And basically, under the auditing rules, anything that we would characterize as substantial new development where we're creating something new, or it's a substantial upgrade, we have an obligation to declare that as an asset. And so we have established a process where we, whether we're using internal staff or whether we're using outside contractors, any software development that we do like that, we document what it is. And basically we're using hours work. So if it's software development work that Nancy or Myrna are working on, we catalog our hours based on the project activity that they do. If we were using an outside contractor, that contractor is assigned to a specific asset project. And we keep track of that, and then we calculate how much we spent during the period on the creation of that new asset. Then as a part of our sort of end of year closeout of the books, we convert that from an expense into an asset. And that's what goes into the depreciation. So from our point of view, it's an expense. From an auditor's point of view, it's an asset. And because of the way they do that, that's why we, in our big compiled financial reports, we end up with higher depreciation, and it looks horrible, but it really is just a financial reporting mechanism. So this year, that is calendar year 2024, it's been a fairly tight year. Most of the work of the software development team has been on maintenance and improvements of our current system. We haven't really created anything genuinely new. The exception to that is that we finished development on our county upload API. And that is the API that we use with local service providers and counties to transfer county records up to Iowa Land Records so that then we can process them for PII and then put them in the Iowa Land Records website. That generally was a new activity. Some of that asset development occurred in last year, and so we reported it as an incomplete asset development that year, and then we finished it this year. And the report that you have shows that we expended a little over $16,000 specifically on the completion of that new API application. And so that's what we reported to the auditor. That's moving into the asset category, and then that will be part of the future depreciation. Part of what I would characterize as moving off the balance sheet is that some of the assets that we developed back in 2022, are beginning to reach that end of that 3-year period, and now they are no longer going to be reflected as an asset, but they'll be fully depreciated. And so from that point of view, because we've been fairly limited this year, the balance sheet is going to look better than it has been because that depreciation is being completed. So that's my addition to the audit report, and we'll look forward to working with Denman to present the formal report to you in August. So with that, I would be happy to answer any additional questions.
Thank you, Phil and Samantha. Anyone have any additional questions?
Hey, Stacy, it's Lisa. I want to jump in and echo Phil's thanks to Samantha for the job that she did. Denman has a portal or an organizer where they list the homework that they need. And she absolutely handled all of that with questions to us as she needed additional help. Prior to the organizer, the week that they would be in the office, Phil and I were pretty much dedicated to, okay, what do you need next? Let me get those reports, working with the development team to get those reports generated so that we could help them in a timely manner. So it really does go smoothly, and Samantha really killed it this year. As far as what Phil said about what they audit, they will come to us and say, okay, like next year, you guys, they're going to come to us and say, hey, we noticed that your point of sale transactions are much higher this year than they were last year. What's the story with that? And we're going to remind them that this is a year that boats renewed, and that will make perfect sense. And they'll look at the trend and see that that's true. So that's how granular they become in what they're looking at. So it's a really good process, and they do a really nice job of working with us to make sure everything goes well.
Great. Yeah, a couple of good kudos to you, Samantha, and the chat pod as well. So I wanted to point those out. Anyone else have any comments? If not, we'll follow the agenda. ESS Financial and Strategic Review. Who's next?
So let's bring up the trends report now, Samantha. This is where you have to put up with me a little bit, so I apologize for that. But the trends are looking better. Okay, so we're kind of following the pattern, whereas we see a dip in February. Typically, this is not unusual, and then we see it bounce back in March. The good news is that, the 2025 numbers thus far, are better than 2023 and 2024. And that puts us in a position, just as you saw in the financial report in this month's meeting, that we have net income in the budget. And so we're on a track that we hope we would be on. And in fact, I would just say that things are looking better than maybe what we originally expected when we put the budget together in November. And as I've shared with the group before, I'm not a professional economist, but one of the things that we generally observed is that even though interest rates remain high and the cost of housing is also remained high. At some point, people have to move on with their lives, and they say, "Well, yeah, I really do want a house, or I really do want to move," and so they bite the bullet and make that happen. And they hope for better interest rates so they can refinance down the road. That's sort of the way it works. And I think that's what we're seeing right now, is that we're seeing people who are hesitant to move in the market. They're moving because they just have to, or they really want to. And they're, in some respects, just getting used to it. So don't make any investments on what I just said. But that just appears to be what's happening, and so we're encouraged by the trend line, and we hope it continues into the remainder of spring and summer. Um, and kind of moving on into you know, the the budget discussion. Not to get into much detail about it, but the appropriate thing to say is that I think, for example, things that we had previously decided we were going to pay for out of the reserve, we may be able to move those back into the budget. And then there may be some opportunity to give us a chance to maybe make some investments in further software development or further enhancements to our systems that we otherwise might not have been able to do. That all will be reflected in a proposed budget amendment that will be presented to you in May. And so that's something for you to look forward to. Moving on, then, Samantha, if you could display the spreadsheets that are included in everybody's packet. So the place I want to start with is just a discussion about kind of what our thinking is with regard to cost sharing credits. So we, in the previous meetings, asked the coordinating committee, this occurred in February, to give preliminary approval to the cost sharing credits for local maintenance services. Um, uh, and those were adopted with the understanding that before we issued invoices to the counties, that we would closely examine that situation and then um, possibly make some adjustments when we got to the May meeting. So that's sort of the track that we are still on. However, one other thing that has happened in conjunction with that is that with most of the service providers, um, we have successfully negotiated and executed contract amendments with them that are going to change um, basically the fiscal year that we're on going forward for those agreements. So um, uh, with the exception of Avenue, um, uh, of the ones that we know about, Solutions, Cott, Tyler, and DevNet in particular, we've completed and executed those contract amendments. So the effect of those amendments are going to be that we are going to change um, the fiscal year from a state fiscal year to a calendar year to match our budgeting process. That was presented to the ESS committee at their meeting in February. They approved the templates. Then we presented those templates to the local service providers. We asked them to consider and approve these changes. So what will happen now is that in July, the agreements with the local service providers are going to be extended for 6 months, okay? And then we're going to renew them again in January for calendar year 2026. The effect of that is that our budget costs for 2025 are going to go down. essentially by half, because we're only renewing that for half of the year. And so for that period of July 1 to December 31st, that's the maintenance period that we are buying. So the spreadsheet that you're looking at for the period of July 1 to December 31st basically goes through the the process of recalculating that for the year. So I'll just pick on Adair County. Adair County, the maintenance amount for Tyler was calculated to be $3,228.70, the same as for every other provider. Using the formula plus adding the standard, the specific amount of $95 to each county, their credit amount would have been $1,097.14. And that is the amount that was approved by you and then by the ESS Coordinating Committee at the meetings in February. So everything being equal, that's the way it would have worked out. The county would have received a credit amount, and they would have been billed for the difference between $3,228.70 and $1,097.14. That's the way the math works out. So the two middle columns, G and H, really relate to the counties that are served additionally by an imaging service providers. And as of last year, there were only 2 of those counties remaining. Everybody that used to be on ImageTech has moved on. ImageTech sold out to Zeta, G-I-I-D-A. They have an arrangement with Boone and with Mahaska County. So as I scroll down, you don't have to do this, Samantha, but if I come down to Mahaska County, they also would have paid Zeta $1,170.29 for their maintenance services. So column H, where it's applicable, is just the sum of those two. That's what their total maintenance amount would have been. Okay, so most of the counties are all standard now, and that's what we'll continue to focus on. So if the annualized amount was $3,228.70, a half a year is actually $1,614.35. So it means that counties are going to pay less, and so will Iowa Land Records for calendar year 2025. And the suggested action is to basically plan for the invoices in May with a total amount of $1,614.35, but to also reduce the cost sharing credit to reflect the fact that it's only for 6 months, not for a full year. And in the case of Adair County, that would be $548.57. Okay. I just need to put a asterisk here to make sure everybody understands we're not asking you to approve anything today. This is a preview of the May discussion. We're just showing you the math and how things work out. So there's one other factor that comes into play, and I want to make sure everybody understands I'm making no judgment here. This is not a commentary, but the fact of the matter is that Fiddler consciously decided that they did not want to be under the maintenance agreement anymore. They did not. They issued a notice of not intent to renew, and that means that, well, we don't have a contract with them. And from my perspective, that means we don't owe them any compensation. And therefore, we're not going to bill the counties for that. Okay, so that sort of changes the equation. So if you just look at Ottoman County, if it was a normal year and we did have a contract with Fiddler, their maintenance amount would have been the same, $3,228.70. They earned a cost sharing credit of $1,280.80, and then all of the math would have been the same, except that there's no contract. So therefore, there's no proportionate amount of billing, and therefore there's really no credit amount to be granted. And so everything that is highlighted in blue, particularly the light blue, just simply reflects that change in reduced costs. Then Boone is a little bit darker blue, and the reason is that they currently are not served by Fiddler, but we are told that they are going to be converting as of July 1 to Fiddler. So if they were going to be staying with Hero Solutions, then they would have been in the cost sharing program just like everybody else. But because they are not going to be doing that, they are sort of removed from the calculation as well. If you went to Mahaffey County, which is going to stay served by Hero Solutions with a combination of data, they're going to be treated exactly the same way, except the numbers are a little bit different. The amount of their invoice would have been half of what it ordinarily would have been. And the suggestion is that we would reduce the cost sharing credit by an equal amount. So that is a picture of what we would be looking at for the period of July 1, 2025 through December 31st, 2025. So then you may ask naturally, well, what about calendar year 2026? So if you, again, look at the numbers, we're just making a projection here. We're trying to do some estimating. So these are not final numbers, but I can tell you that one assumption would be if you look in column G, you can see that the maintenance amount for the full year of calendar year 2026 is estimated to be $3,341.70. We don't know the exact amount of that yet because we are pegged to the adjustment, the Social Security Administration. They don't make that announcement until October, so we really won't know that number until then. But we're gonna, just for this purpose, we're just gonna make the assumption that they'll announce a higher inflationary number just because of the markets that we see. And then the provisions in our agreement with the service providers will kick in and limit that increase to 3.5%. So if you look at the current 2025 number and then you apply a 5.5% increase, you get $3,341.70. Another assumption that we're making in this chart is that that overall for our budget, that we would budget roughly $120,000 for the cost sharing credits again in 2026. And then we would run that through the formula. And then once the formula was run, we realized, okay, that's not going to use up the whole $120,000. So then we add an arbitrary number to each county. In this case, we selected $130 as a standard amount to add it to each county's credit. And so in Adair County, that ended up being $1,257.40. Now, there's another assumption built into column E, and that assumes that the ratio of their e-submissions to total recording remains exactly the same as this year. So that is a factor that could change as well. But then as you roll that through the entire formula, basically, the total amount again would be $3,341.70. And then the county would get that amount in their cost sharing credit. So their net cost, what they would have to budget for calendar year 2026 would be $2,084.30. something that we don't really know the answer to yet is, how would we handle billing in 2026? Would we issue the invoice in January, or would we do it in May or June again, as we have traditionally done? And then traditionally, we've given the counties the option of paying out of either fiscal year, which many counties take advantage of, but they're not required to. So we would be able, I believe we would be able to make determinations of cost sharing credits um, uh, uh, in in uh, in early 2026 based on the ratios that occurred in calendar year 2025. I would suspect that um, the the invoices would go out sometime after January 1. And then if we follow a pattern, we would be fairly flexible about at what point those counties made that contribution. I would, again, I'm not making any commentary here, but I'm just stating matter of factly that one of the things that had been said in advancing the the fee policy proposal this year was that if that had been approved, then we would not be billing the counties for it anymore. We would just use the budget that we got from the legislation to pay for 100% of that. But that doesn't appear to be going to happen, or we aren't sure it will, at least. And so we have to build when you build assumptions about things, you kind of have to say, well, what's the current law say? And that's how we have done that. So the intent of this is not to say this is it. The intent of this is to say we definitely agreed already with the service providers to shift from a fiscal year based on July 1 to a calendar year. And so now this is the consequence of that action. It will give us some additional flexibility in the remainder of 2025, but in 2026, we're going to have to account for the full bill. But the timing is going to be a little bit different. And that's what we're exploring now about, okay, how do we want to handle that? So I'm basically asking for the finance subcommittee to give some consideration to the concepts that I presented, and come back to us with questions. Look at your own county, see how you're affected, uh, and uh, and then between now and the next meeting, let's have some either email, or we can have a kind of a conference call just to talk about that, just to get ideas, not necessarily officially, but we're looking for input. And so we wanted to share that with you today. So if you have any questions about this now, I would do my best to answer them.
Any questions? I just have a quick one, Phil. So the counties that are currently served by Harris are Solutions, and some of them still have the imaging company.
2 of them do.
So with is there any like talk about the imaging companies going away, like Harris absorbing that at all? So it's just, is my question? Yeah, there's
Well,
data
well,
and
as I
CBS.
as I said, there are only 2 left in that category. Boone is switching service providers, we are told, so their data would not have a relationship in that county anymore, and we would adjust the numbers accordingly. Communications with Mahaska County suggests that they are not planning to make any changes at this time. So that's really a county decision about, how they do that. And I understand why most counties have moved away from the 2 service provider solution. I understand that there's logic to that. Um, but for whatever reason, they are satisfied with their arrangement. So uh, we have to go with what we know, I guess, is the way I would say it.
All right, thanks. Anyone else have questions? More to come as we prepare for May.
Okay, so please, everybody, give some thought to this. Look at the numbers. If you want me to share the spreadsheet with you, I'd be happy to do that. There are no trade secrets here, and of course, we're dealing, particularly for calendar year 2026. We're dealing mostly with assumptions and estimates. So you may have some questions, and we would love to hear your comments. So that's all I have on that. And then if we go back to the agenda, I know we're running out of time here, but just to quickly talk a little bit about some potential budget and organizational revisions. So one thing I want to just mention to you is that with at least a portion of the savings that we're going to get because of the changes in the mixture of the service providers and participating in the cost sharing program. We do have a couple of situations that I would consider to be special cases. One of them is Avenue, which serves Ringgold County, and the other one is Zebnet, which serves Marshall County. And when you think about Tyler or Solutions or even COT, who serve multiple counties, the numbers work a little bit better for them because you multiply their counties times the maintenance fee amount, it gets to a number where they can sort of fit things into their budget, for the year and do development work that we ask them to do. In the case of these two counties, it's pretty hard to, produce a return on investment, if you will, because integrating with our APIs is not a trivial thing. And so I just want to prepare you that, we are open to having some conversations with those service providers to see if there's some way we can help them with the overhead of some of the development work that they're doing. I'm not going to throw any numbers out there right now, but certainly higher than one county's maintenance costs. And the provisions of our agreement with each of the service providers provide the option for them to make a request for supplemental compensation for extraordinary work that they're doing. The one thing I can say right now is that, there have been some initial conversations with both of those service providers about, is there something that we can do to help you, because we want you to be able to connect to our updated APIs. That's what we want you to do. But we understand that serving one county is kind of hard to spread that cost, a lot across a larger number as some of the other service providers can. So I don't have anything specific to present to you right now or to the ESS coordinating committee, but I want you to be forewarned that that discussion is taking place and that we may be bringing something forward that could have an effect on the budget, and that would be reflected in any conversation that we have in May. Then another thing I think we need to just talk about in generalities is that we are going to be having a staffing change at Iowa Land Records in the development team. One of the key members of our team has accepted another position, and we're very happy for them. And so we're going to have to be um, doing things differently in the future, and we are going to go through a transition process. So one of the things that is a part of this is that because the knowledge is so specialized, we want to be in a position to retain that even after the staff member moves on. And so there's a discussion taking place about establishing, not for indefinite period, but for a defined period of time, a 1099 agreement with that individual so that they can be there to provide technical assistance to the other members of the team that may not have been dealing with some of that specialized knowledge, because that is all going to have to shift to them. So that is a conversation that is happening, and it could manifest itself in the form of a 1099 uh, contract, professional services agreement, and it should have an impact in terms um, of the budget. And there is also a very real potential that a current member of the team may be promoted into the technical lead position, and that is likely going to involve a compensation adjustment. And I think we just all need to be aware of that reality. In addition to that, I am also having conversations with our two primary third-party software companies that we work with, that we selected through an RFP process a few years ago. Those companies are called Lean Techniques, and the other one is called Rewrite Code. I didn't make up their company names. That's just what they're called. And we've worked with them before successfully, so this is not a new arrangement. But we may be seeking their technical support, particularly during the transition period, or to accomplish some specific software development goal that will fit within our budget. So there are changes there. Then, not to bring up a sensitive issue, but we have several members of the staff who've not had a permanent adjustment in their compensation for almost 2.5 years now. We did provide supplemental compensation to several of them at the end of the last calendar year, and I appreciate everybody's support for that. But that's different than making a change to their base. And given the trend line that we see in our current income stream, I think we would be able to afford making a permanent adjustment in several positions. And so, I know there may be some sensitivity around that issue, but the reality is that the members of our team provide a very valuable service. Um, I don't think we have, unless you want to just talk about me, I'll take my hits if you need to. But the other members of the team are indispensable in my point of view. And so we need to take care of the team, especially having lost a key member that we're going to have to transition away from. So that is also something I want to just give you an idea that the staffing adjustments, there likely will be a recommendation from me to make some compensation adjustments, and we may be entering into some contract agreements to shore up our operation to make sure that we get through this transition period. So the details will come, but please don't be surprised. Something is coming your way, and we just haven't put all of the pieces together just yet. So those are the main things that I would want to highlight to you to be watching for with regard to the budget, with regard to the cost sharing arrangement, regarding some staffing changes, and perhaps some supplemental arrangements with third-party individuals or organizations. Those are in the works, and there may be some meetings coming up where we talk about that again as well. As best I can, I am happy to try and answer your questions.
Any questions for Phil and the team?
If not, then the last thing that's on the agenda that I could maybe say something about is where are we at with the recording fee and modernization legislation? And the only answer I can give you is I don't know. We're sort of in a holding pattern. It is something that could be brought up in the House Ways and Means Committee through their schedule. There could be things that are brought up in other bills as we approach the end of the legislative session. And we don't know what they are yet. So we'll continue to watch for that. And you should expect to receive communications from the association leadership and where applicable, the leadership of the ESS coordinating committee when we have knowledge. But right now, there nothing visible has happened in the last 2 weeks, and that's just where we're at. So it's a short report today. And that's all I have. And Samantha, if you have anything you want to close with, that would be great. But that's all I have.
There's silence. Any other questions for the good of the group? Well, our next meeting is May 8th at 9 o'clock. As always, reach out to Phil and his team, and you guys have a good rest of your day. Thanks, everybody.
Thanks,
Thank
everyone.
you.
Yep,
Be
thank
well.
you.
Have a great day.